What's going on, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. So as always, we have our broad market, SPY the Qs, and IWM. After that, we'll cover our core list of companies, and the Discord members did vote on a new set of quick-fire round tickers. If you want to vote for next week, feel free to join the Discord, link down below in the description of this video, along with all of our other free resources. That being said, there's a lot to cover in today's video. Let's just jump right in. Jumping right into our SPY weekly chart, talking about candle structure and location as always. For structure, I would say that we have something closer to a hammer candle than anything else. This lower wick here is certainly larger than our body and upper wick as well, and what it's telling us is that the buyers responded to these lower prices. In terms of market location and structure, right, if we draw in a level that looks something like this, it's exactly where the buyers needed to step up and where we expected them to step up if we were going to respect the market structure. I am placing some significance into this lower wick because if you look at the volume that was conducted here, it's pretty significant. So it's not like this is a fluke or a one-off. I'm definitely putting some, again, significance into this lower wick. Now, there's three perspectives that I want to share with you while we're on the weekly time frame. The first one is the bar-by-bar perspective, which is telling us that we have lower highs and lower lows continually forming. But with this lower wick in place, I would be on the lookout for a new higher low to form and potentially be the start of a new uptrend. The next perspective we can consider is more medium term. Here's our last significant low. If this is a new significant low, what did we just do? Well, we technically put in a new higher low, which is indicative of uptrends. The last perspective I want to share is just if we zoom out, give ourselves the most context that we can, look at this. I mean, we're just barely off of the all-time highs. We're just now starting to see the first significant pullback, the last one being what we saw here in August and into September. So remember, I bring this up for a few reasons. Markets need a little bit of push and pull to remain healthy, right? We're still very, very close to all-time highs. Again, don't get overly bearish before we start to break critical market structure. Don't get overly bullish either. This is why I share these perspectives. I mean, the market could potentially do something like this, but based on what we just talked about, do you think it's a likely scenario? I would say certainly not. So jumping over to our SPY daily chart now to talk some more nuance and levels to pay attention to this week. We're going to cover the upside for a very specific reason. First reason is obviously the weekly chart was giving us a bullish slant, but if you look at the low of Thursday and the low of Friday, it was a higher low. So what does that tell you about anyone who is selling into that morning drive lower on Friday? Well, they were certainly weak-handed sellers because obviously most of them covered into the close of Friday. The other takeaway here is that we're now trading back above the 50 SMA, and if you remember from the midweek market update, here's our area of balance. We now have a look below and fail back into the range. So what is the target in this scenario? Well, we know that it's the top end of the range, in this case closer to 392. I would caution you though to really be on the lookout for this resistance trend line before we get there. That's what's keeping our weekly highs continually getting lower, and I think a lot of people are, tuned into that. So be on the lookout for that resistance trend line. It could be anywhere from 389 to 387 depending on time of week. Of course, we do have some levels to battle back up through. We have 385 and then 387.50 before we get there. But based on the market volatility, you can see obviously we've just chopped right through it. We may pause there intraday, but I wouldn't really place too much significance on them from a daily perspective. Anything above that resistance trend line, we talked about the 392 top end of balance, and after that, blue sky territories. I'm not going to place too much importance into this high here because there was not a whole lot of volume conducted. If you remember, that was a gap up after a holiday, and since then, we've just faded lower. To the downside, if we get rejection at the resistance trend line and roll back over, your critical line in the sand is the low end of balance here and 50 SMA at 381. Anything underneath, you'll notice intraday, there was a brief pause around 375, both of these days actually, so there was some congestion there. But as we talked about from the weekly perspective, we do not want to see the week's low violated at 371.85. It would be great to see a higher low form here at 375.50 if down is the direction. But remember, everything that we've talked about so far points to slightly higher. I'd be very cautiously bullish here, not at all poised, bearishly. To the downside, though, remember, let me remind you that the range here on Friday was $12.12 in SPY. That's an absolutely astronomical range. So if this range continues, I want you to be prepared with some downside levels as well. We're first looking at 368.32, and anything lower than that is 364.04, as noted by this prior area of market structure. So we'll leave it there, but remember, based on the weekly, based on the shorts here from Friday that were weak, I would say we're cautiously bullish into the beginning of this upcoming week. Moving over to the Qs now, hopefully you're noticing the picture is completely different. Obviously, our resistance trendline is much steeper. Some other takeaways here are that we're not trading back into the area of balance yet, so we did not see the look below and fail officially. We're also nowhere near that 50 SMA, and if we look at Thursday's low and Friday's low, we did set a new lower low on Friday. So all things considered, we know that tech has been weak. It shouldn't come as any surprise that the chart looks different. But what can we do about this chart? Well, the key level in the Qs this upcoming week is going to all revolve around 311. Why is that? Well, that was the breakdown area. So if someone shorted it here, they're going to start to feel some pain if we start to trade above. If we start to trade above and get acceptance above, that could set off a short squeeze, in which case we're looking at the downtrend resistance line, and then probably the 50 SMA and top end of balance here at 324.16. The other scenario is a retest. Again, based on this hammer, I think the retest of 311 is going to happen regardless. The other scenario is we come into 311 and we get rejection, and anyone who shorted the first breakdown is going to add to their position, in which case I would probably say we want to come down and retest Friday's low closer to 298.50. To the downside after that, as downside targets, we have 290 and then the 200 SMA after that. Depending on time of week, it could be anywhere from 284.50 all the way up to, I would say, 285.50 based on its trajectory here. But again, everything in the Qs is going to hinge upon the 311 whole dollar. And last but not least, we have IWM Russell 2000 and our small caps. This chart looks, again, slightly different, and I would say that it is the most bullish chart of them all. Why is that? Well, we really have not seen a close below that 50 SMA on the daily time frame. For now, again, because we saw a look below and fail, we maintained the 50 SMA. I would say that the target here and the likely move is probably up into the resistance trend line early on in the week. After that, of course, target the balance highs. Let's just put a level to that. It doesn't look like we have one here. I would say that it's probably close to 227 the whole dollar. Anything above, blue sky territories above, let's get rid of that one and make it more accurate here. I would just be looking out for 230 the whole dollar. To the downside, if we get rejection at any of these levels, obviously your support is here first, 215 prior market structure, but again, here at the low of this week. Just like SPY, you probably want to see this hold up as a low and then a higher low to form this upcoming week to maintain a weekly uptrend, right? Anything in IWM underneath that opens up the door to start to fill some of these gaps below from 199.24 down to 197.75. Anything underneath is prior market structure at 199.66. Again, based on range, I want you to have some of those targets, but do I think it's likely we go there? Probably not. Cautiously bullish in the IWM as well. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping into our core list of companies, I want to preface them by saying whatever happens in the Qs at that 311 point we've just discussed will likely drive the direction of many of these tech companies. The other thing to make note of here is that all of them, or most of them anyways, have a hammer candle that has printed on Friday. So what we need to do is consider where it's at in terms of market structure as well as any patterns that are developing. Here in Apple, it's quite clear. We actually have a potential double bottom, and if the Qs accept over that 311, I think Apple is a great candidate to move higher and potentially come up and retest that 126.64 area of resistance and the fake break high here at 128.71. Now, the bearish case is if the Qs roll over at 311, what do you have in Apple? Well, it's this pattern here, the H pattern. You flush the lows, and you probably go lower into the 200 SMA, hanging out around 114, and then lower into next support at 112.50. I wouldn't say we go much further than that, but I've been proven wrong in the past, so we'll go one more level below at 107.30, but probably cautiously bullish here in Apple based on everything we've talked about, especially in SPY. Again, I think Apple is a good candidate for potentially being bought up and at least revisiting that 126.64. So Netflix, we do once again have a hammer candle that has printed on Friday afternoon, but the market structure here is completely different. We did finally fill this gap below us, and now we're bouncing at the support trend line and the 200 SMA. The key takeaway here, though, is that we're back testing this flush point at 518.56. If we can accept above and the Qs accept above their 311, then definitely looking for a move higher in Netflix up into that 531 area where the 50 SMA will start to coincide and provide some super resistance. I'm not really looking for much higher in Netflix like I am in Apple after that point. If the Qs roll over though, then I would definitely expect a rollover at the back test of this area here on Netflix, in which case we probably come all the way back down into this 493.85 area. Now, why that area specifically? Well, if we scroll back a little bit, look at how many times it has acted as a magnet. Cluster of lows, prior highs, right? There's a lot of price history around this 493.85 area, and if we roll back over, that would be my target. I'm not really comfortable saying that we're probably going to this area. It's probably not in the cards for this upcoming week, but you have the levels in case we do start to really flush. So Tesla is more of a question mark to me than a definitive up and down sort of play. In terms of market structure where we're at, I mean, we pretty much came into that area of support and we've seen a $50 bounce off the lows there on Friday. So that's pretty impressive, and it certainly looks like buyers are stepping up, but given the overall nature of this sell-off here, I'm not entirely sure if it's done. We could see a little pause and then some more selling. I would just be on the lookout for anything underneath Friday's low here at 550 to open up the door to the 200 SMA, but more importantly after that, this gap to fill from 433 down to 412. Keep in mind that market structure here is not very strong. So, that move could happen a lot quicker than you think, and Tesla has proven to us that it can certainly get moving much quicker than we think, especially down as opposed to up. If this, tail does result in more buying though, let me give you some upside targets. First one's at 650. We're playing about $50 increments here in Tesla, and anything above is sort of this dead cat bounce high at 719.51. That would be my last target for this upcoming week. Alibaba is, still one of these charts that I don't really like looking at. It's not very pleasant on the eyes, but if I had to trade this, I would say we're looking for a flush under the double bottom from Thursday and Friday. It just doesn't carry as much strength. It doesn't feel like it wants to bounce like kind of the rest of some of the things that we're looking at here. So I would be, again, looking for the flush under 228.50 for a very snappy move just lower into this 225 area here. After that, you can see there's a little ways to run till this most recent local low here at 212.07. If the hammer truly does result in a bounce, then we'll have to take out Friday and Thursday's double top. It's almost like we had two identical ranges here, and that level is at 236.31. For a snappy move to, I would get rid of this one and just say, at this point, probably here. That would be what I would be looking out for around 241, and then after that, the 50 SMA to start coinciding and providing any sort of resistance on a further bounce. But Alibaba just, again, to me, looks like continued weakness, maybe a little bit of sideways action in here, and then again, that flush of the double bottom for lower. So Facebook is extremely range bound. This one has not moved for about 2.5 weeks now, and what we need to wait very patiently for is either the break above 266.58 or underneath our 255 whole dollar. If the break to the upside does happen, and again, based on this candle here, and if the market bounces, Qs accept over 311, you're looking at a target above here at 273.51, and then our resistance trend line. Keep in mind the resistance trend line has acted quite strongly over a number of months. So if we get into it, I am expecting a first touch sort of backing off, if you will. To the downside, if we flush these lows, then your target is quite simply the top of the gap below us here at 244, 245, depending on, how you want to round that one. And the gap fills down to 234.69. I'm not really, advocating for a full-blown gap fill this upcoming week, but based on the consolidation here, we know that as things consolidate longer, we're expecting a larger move in one direction or another, right? Think of all the energy that's being built up in this box. As we break in one direction, you need to be prepared with some serious targets. NVIDIA is another pretty ugly chart, I would say, with no clear direction as of right now. I mean, obviously, this entire week, it's almost felt like free fall, but what we're starting to do now is actually defend that 200 SMA. You'll notice that we did not close below it at this point in time. And if we think about this in terms of a larger overall range, right, if we do something like this, here's your range. Technically, we had a look above and fail, in which case we target the bottom end. And now this hammer could be a look below and fail, in which case, I'm not going to say it's going to happen this week or anytime soon, but technically the target would be the top end of the balance there, closer to 590. So again, just like Tesla, this one's kind of a question mark to me. The hammer would, again, indicate that buyers are stepping up, defending that 200 SMA. I would say a conservative upside target would be at 515.50. Anything above is going to be that 544 mark. To the downside, if we roll over, I would just be on the lookout for Friday's low, closer to 467.77, and anything underneath, you can see we haven't really been in these territories recently. So there's your low there. The next up is going to be here at 431.40. Again, based on where we're trading right now, those are extreme up and downside targets, but volatility is definitely high. I would play this one extremely cautiously on NVIDIA. So Microsoft is another candidate that actually looks fairly decent among all of the selling in the marketplace. Why is that? Well, we talked about it very briefly in last week's video. Here's your area of consolidation. We had nothing more than a look above and fail, and now a look below and fail, in which case we know the target is always the top end. So 235 is a reasonable target for early on in the week in Microsoft. If we accept above, and the Qs accept above their 311 mark, look for this gap to potentially fill in Microsoft up to 240. Anything above is all-time highs. Sort of resistance closer to 245. Now, if we reject, the Qs reject that 311 and we never make it to the top end of balance, look for a flush back underneath our 228.78 for a move to the low of Thursday here, which was prior market structure, very important there at 225 the whole dollar. That's what you really want to see hold. Anything underneath, again, this is probably a larger range that we can talk about later on, but for now, if I had to pick out a next up area of support, it would be here at 217.25. And last but not least, the beast, we have Amazon. This one, again, kind of just like NVIDIA, almost like Tesla. It's sort of a question mark to me. I'm not entirely sure if this hammer candle will result in more upside just based on where we're at, right? There's no clear market pattern unfolding in terms of structure. If we scrunch this up a little bit, you'll notice we are definitely at a critical area of support. So for me, the fact that we sort of dipped our toe below it and then rebounded back above signals that there are people paying attention to this 2,900 level of support. Now, whether or not that continues to hold is a completely different story. On another test here, after a lower high, let's say Amazon does something like this, lower high, retest, probably goes lower than 2,900 on that go around, right? Here's your highs, lower, lower, lower. Here's your next leg down. If we get the bounce, boom, that you can see how that scenario would play out, right? So if we test it one more time, definitely expecting lower. To the upside, if we can clear back above sort of this area of congestion in the chart at the 3078 above that 200 SMA, then we might be out of the woods. Maybe we consolidate in here, but we have to make sure it's not a sharp rejection at that level. So that's kind of my upside thought on Amazon and how it'll save the day and remain above that 2,900 mark. If we flush 2,900, let me just give you a level to watch out for. I don't even have one prepared, but just so we're on the same page here, it's probably going to be closer to here, 2782, 2800. Those round numbers will certainly act as areas of support. And again, based on this chart here, I'm not comfortable saying definitively up, definitively down. I hope you can respect the fact that being prepared with some levels to react to is just as good and what we need in the market. Kicking off our quickfire round with something other than PLTR for once, which is nice, but we will get to PLTR because it is still on the list. I want to preface this entire section of the video by saying a lot of these companies, I hate to say it, are in a question mark spot, right? I'm not entirely sure. It's not clear to me what direction they could be headed. And again, I hate saying it, but I would be misleading you if I told you I knew for sure they were going to go up or down, or they're in this pattern or that pattern. A lot of them, they're in no pattern, and it's not clear what direction they could be headed. Another thing I want you to keep in mind here is that many of these newer companies that aren't yet profitable are going to be extremely sensitive to what's going on with interest rates. So I want you to watch out for something like the ZN, which we talked about in the midweek market update, to keep an eye on those interest rates, because obviously these companies have to borrow money to keep their operations afloat. The more they have to pay to borrow money, obviously that impacts their share price. Let's go ahead and hop right into NEO. First level here on NEO that I want you to pay attention to is $40, the whole number. If we can accept above it, maybe in this range here, it certainly sets up the possibility for a rotation all the way up to 50. If we see a sharp rejection off of that area and trade into Friday's range, I would probably stay away, both as a buyer and a seller. Again, it's not clear to me that this lower wick is truly indicative of people stepping up and buying NEO at these prices. We're coming off of a pretty aggressive, sell side move. I would wait for more confirmation before getting involved. Next up, we have XPEV, which is almost the same exact scenario. I will just make you aware that earnings are before the bell on Monday, so anything I say here in regards to levels could be blown out of the water. Keep in mind that we did fill this gap. There's one more gap below us here from 23.38 down to 22.45. To the upside, again, just like NEO, if we can accept and get some price acceptance over 30, you're looking for the potential rotation about $10 higher into 40, but with earnings coming out, anything could happen to those levels that I've just laid out. The next one we have is SE. Now this one I do feel a little bit more confident in, just based on this uptrend that it's been in for quite some time. I'm not saying that, again, keep in mind here that earnings are still negative, so I'm not saying it's not sensitive to interest, but keep in mind this uptrend is extremely well intact. There's your support trend line, bouncing off of it on Friday with the hammer candle. Again, something like this I have a little bit more confidence in saying we could potentially see some more upside. I would wait to get involved over 240 or 238.27 for the rotation, potentially back up to revisit some of these highs. Now, why is that? Well, first of all, here's your high. Technically, it's a lower high, but as we've come into that support trend line, I would classify this as not a significant lower high. If we can't make it to those sets of highs, then that would be the significant lower high. So something like this, top out in here, definitely looking for the short back down below 240 to revisit some of this market structure around 210. Next up, we have PLTR, finally getting to that one that everyone loves. And what we're looking at here, again, is more of a question mark. It's not clear to me what direction PLTR could be headed. Certainly, we do have that hammer candle here at critical market structure, but it was what? It was a fake break, right? So we broke down below, and it looks like we've rebounded back into this range. I would be watching out for chop in this range, potentially wait on any new longs until we can break out over 27, in which case I would target the gap fill up here around 31.18. But again, is that abundantly clear? Not necessarily. If we roll back over and accept back into Friday's range, again, just like NEO, just like XPEV, I would probably stay away both as a buyer and a seller. Next up, we have OKTA. This one's interesting to me because, again, slightly profitable here based on earnings, and the oversold nature of this move into a critical area of market congestion is interesting, right? Right around $200, you can see in the past, boom, 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 boom. And right now, we're right at these levels, right around 200. It certainly acted as a strong area of support. After coming off of a higher high from here, I'm definitely looking for some sort of responsive trade, people to step up and potentially buy OKTA at some of these levels. Your first area of target sort of is that 200 SMA, reclaiming that again, and then a rotation back into here, 247.10 as noted by prior high, and then support. So that's what I would be watching out for. I wouldn't really look to short this as we're, coming through this area of extreme market congestion. If we flush underneath 193.18, potentially looking for shorts, but based on how far we've already come here, it wouldn't be my first sort of choice. Next up, we have NNDM, and this one also has earnings, I believe, on the 11th. Yes, the 11th, and it looks like they are before the bell. So keep that in mind. Again, this one's a question mark. To me, I would want to see it hold on to $6. Anything underneath opens up the door for a move all the way down to about 3. So about a 50% move lower there in NNDM. So definitely don't want to risk too much here if you decide to take a stab long. To the upside, you would want to see it clear back above 830 to potentially chop around in this range. Anything above about 10 opens up the door for a move back up into 1250. 50 SMA will be there on the ride back up. U for Unity Software is up next, and this one has formed a hammer at our area of support in the past. I would say this one, again, same as some of our others, sensitive to interest rates, not fully profitable yet. And, for now, could you fish for a little bit of an oversold bounce? Maybe. Would it be my first choice? Not necessarily. If we can accept back above 100, that would be the critical sort of point in my estimation. We have resistance, 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 all around that 100 psychological mark. If we accept back above, then maybe look out for something like an inverted head and shoulders, where here's your next set of lows if we do something like this, and then boom, break the neckline at 113, we'll call it the whole dollar, to potentially come back up and revisit 137.37. Next up, we have SQ. SQ had a very, very extreme range here on the end of the week, covering almost all of the areas of support and resistance that we've talked about over the past few weeks. It's been in the midweek market update. This one, just like the rest, even though it's not going to be as sensitive to interest rates, is still a question mark. Why do I say that? Well, this hammer candle is smack in the middle of the range. Whenever we fall directly at the 50% mark of a range, it's kind of like a wait and see game. If we start to trend higher, certainly look for the top end of the range. Here in SQ, that would be closer to 241, 242. If we start to trend lower, just look for Friday's low, which just so happens to be the bottom end of the range here at 191.84. Again, you have these levels mapped out, but for now, I hate to say it, it's still a question mark. DIZ, on the other hand, is a better looking chart than most of the things that we've looked at so far. Look at the double sort of lower wicks here right off of prior market structure. I would say if we can clear this area of resistance, it's more of a resistance trend line, something like that. If we can clear that, definitely look for a rotation up to all-time highs and to continue into blue sky territories over $200, the round psychological number. To the downside, you really want to see it hang on to that 182.82. 50 SMA is just below us. I mean, to me, this is a great setup among, a number of things that we've just said aren't that clear. This one to me looks great as a buy here in DIS. We want to make sure that it does continue higher though. Otherwise, we set up the opportunity for a head and shoulders, in which case a flush of 182 sets up lower here in Disney. But for now, based on these hammers and the defend of this support area, it looks good as a buy. And then lastly, Teladoc. This one got absolutely hammered over the past week and a half, more so than some of the things we've already looked at. And I would say it's coming down into a critical area of support. You can see all of this market congestion from in the past around this general area around 180, right? So although technically the support is at 168.85, if we just zoom in here, we know it's slightly higher. And, based on the oversold nature of this, I mean, don't get me wrong, earnings here were absolutely atrocious. I would say, it's kind of a wait and see. If you want to potentially take a stab at it long, looking for the oversold bounce, by all means, I would probably look for a target here around 210, 200 SMA. Anything above is here. You're 234 just about, maybe slightly lower, call it 230 based on this little small dead cat bounce that we saw there, but not really expecting a whole lot out of Teladoc, maybe some sideways action, okay? So those are my thoughts on many of these companies. Again, I think a lot of them are in a wait and see period. Again, I really hate to say it, but that's just simply the truth. It's not abundantly clear to me, other than Disney at least, which way some of these setups may potentially go. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section or by simply leaving the video a thumbs up. And with that, I wish you all a green trading week.